the thing with you is that you have helped develop a disruptor in South Africa's banking industry. Yet you are not part of that team anymore. But perhaps before we ask why, take us through the journey of developing this technology that now is TymeBank, that is causing traditional banks a few lost nights in sleep than they previously had.
Well, the idea started around about 2012. The three co-founders of Time, out of the three, two of us had worked in retail banking for a while. And we felt that the focus of most of the banks was still very much on their core systems and not enough on utilizing technology like mobile phones. And we felt that the opportunity was then to get involved and try and drive out a viable banking proposition utilizing mobile technology. We spent quite a few years working with partners, MTN, Pick n Pay, utilizing the retail network of Pick n Pay, the till points, trying to find those areas where a lot of cost was going into the banks building and owning it themselves. And ultimately we were found by an Australian bank, Commonwealth Bank Australia, who acquired us in 2015.
That's interesting, and I know you're no longer there, and the relationship with Pick n Pay still stands, but what was the reason behind the fallout with MTN?
It wasn't really a fallout with MTN. MTN had a very strong view of how they wanted to roll out mobile money across Africa. They're very powerful in West Africa and East Africa if you look at how they operate mobile money, and very much wanted to pursue a strategy that fitted in with their footprint across Africa.
And why did it take an Australian bank to buy into your idea? I mean, you come from South Africa's banking sector. You can mention the name, I won't, but did you perhaps partner or reach out to them in buying into this idea then?
We did, and there were a couple of conversations going on, so it wasn't a one-way conversation. Commonwealth Bank Australia were just very quick off the mark. It's no secret that they invested in dollars as well, which makes a bit of a difference. I think one of the fundamental differences at that point in time was the valuation conversation. So in 2015, we found that Commonwealth Bank Australia were prepared to consider more of a blue sky venture capital valuation, whereas the then South African banks were very much focusing on a private equity kind of valuation on a PE ratio.
All right, so you got a better price there, you got a better deal. Your reason to sell out?
We didn't want to sell out as the original shareholders and the original team. The challenge we had when we were negotiating with what was then the 10th largest bank in the world was that if we had stayed in, we would have had to co-fund the business as they built the business. And they weren't talking about spending hundreds of thousands of rands, they were talking about spending billions of rands. So we just didn't have the means as individuals to come along. So the option was really to look at a complete sellout and then to work with them to build it up in South Africa and across the other geographies they were expanding it into.
Okay, so do you have any form of representation there now?
No.
What did you make of their decision to sell out of the bank to Patrice Motsepe's investment arm?
Look, I wasn't at the bank at that time, so I can't give a formal explanation. But I think, if you go back and you look at where the Australian banking environment was, there was a large commission running in Australia. I think they were under a lot of pressure to focus on their home base. So I just think that they had to make a decision to focus on the issues that were raised in the commission in Australia. And I think they probably felt, and again, I'm not giving you a formal view, that it would have been a bit of a issue trying to focus on South Africa and on Australia at the same time.
Just before we get into your new venture right now, I'm just interested in your take and your outlook on fintech here in South Africa and digital banks, and especially as it currently still stands, the big 5 banks in the country still occupying 90% of the market share. Your outlook and perhaps your humble view of the time frame it could take for these digital banks like Time to really make inroads into that sector.
Well, I think the timing's right. I think you would have seen some of the account numbers that they are reporting in terms of how fast they are onboarding customers. I think the challenge is not how fast you onboard the customer, but how fast you can get the customer to take up multiple products with you. And I think the major issue is actually lending. And I don't know if this is the ideal time to be trying to lend further. But I'm not an expert. Capitec seem to get it right year after year after year. So
Are you talking about the economy and the pressure
yeah.
to the pocket of the consumer?
Yeah, I think that's really the major issue. It's not so much just the transactional banking. I do think you need to make it easier. I think the digital banks or the fintechs are challenging the large banks to think about how they do things. I don't think they are challenging them bang on let me take money and market share away from you yet. It takes a very big checkbook to be able to run a large retail bank.
All right, so let's talk about where you are currently and your interest in artificial intelligence and your passion or your commitment to the fact that robots are the future and they're going to be taking most of our jobs.
Well, I'm not sure they're going to be taking most of our jobs. I think
this is very good news.
I think robotics is a very important element of the fourth industrial revolution. There was a lovely article recently in BBC about how when the Excel spreadsheets and automated spreadsheets were dropped into the market, that actually jobs were created, not lost. So I think one of the things we don't know yet is what jobs are going to be created by robotics and what jobs are going to be removed. There's no doubt that jobs will be affected. So very mundane, high volume, repetitive tasks like an Excel spreadsheet or accounting, those will be automated. The question is what comes with automation, what jobs are created, and I think that's really the critical point. We don't know yet. So there are arguments by guys like Elon Musk and Bill Gates about what AI and robotics mean. We don't have an answer yet, but there's definitely an opportunity to drive job creation and I think learning out of robotics.
And what are you hoping to achieve in your current role where you are?
Well, the role in DigiBlue is very much a learning role for me. So, I wanted to be in a place where I could learn something new and upskill myself. So right now it's very much about how do we bring robotics in a reasonable and responsible manner into South Africa and into the workplace, and how do we advise on long-term sustainability? It can't just be a hobby or an idea for a couple of months and then you drop it. And the nice thing is South Africa is at the forefront of this.
What's the uptake from companies? And I mean, I suppose maybe just take it back from where you come from in the banking sector, where I'm sure you're very much aware of the fact that thousands of jobs have been announced by way of job cuts as these banks also try to, prepare themselves for the fact that very mundane jobs can be taken or can be done now by robots. So I'm quite interested in what the uptake from corporate South Africa currently is to automation and robotics.
So it won't surprise you that it is in financial services predominantly. Right. So we're seeing most of the work in large insurance companies and in the banks, across retail and investment banking. That said, there are companies in all of the sectors who are starting to look at it and try and understand how it fits in and what it means to have this digital workforce. So how do you have this cooperation between robotics and workers? I think it's very important to realize that when we talk about replacing jobs, it's very difficult to fully automate one person's job completely in a full day. I think you can automate components of jobs, which means you then think about what you free up, how you reskill, and how you refocus those employees, and how you use robotics to assist them in doing the mundane stuff. There's a lovely saying that robotics is actually taking the robot out of the human. And I agree with that 100%. If you spend your entire day simply copying and pasting from one document to another, I don't think you come home at the end of every day loving it and wanting to do it consistently for 50 years. So there are elements where it's negative and there are elements where it's positive. But I think the take-up is mostly has been predominantly in the back-end, high volume processing environments. But with artificial intelligence and cognitive capability, it's now starting to drive into the front of the business.
Let us leave it there for now. Thanks so much for your time. That was Rolf Eichweber, who is the Time co-founder and the DigiBlue executive.